Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to start off by looking at this through SPY. I believe this is a pattern that is setting us up for very much some more downside, right? You've got the daily squeeze in play. We've got two closes below the 21 EMA, and the main decisions for tomorrow are going to be, I'm just thinking $5 wide here in SPY. And that is if 425 does not hold, well then you're going to be looking at 420 pretty quick. And I believe those are very real scenarios for tomorrow. And then you get the question of into the end of October, do we get on down into 407? So definitely a bearish stance there on the S&P 500. We'll see how much of that plays out. While I am going to be focused on that to the downside over the next, let's call it 7 to 10 days, I am looking for spots to start picking up SMH. And I want to be clear on this that, I may be a week, 10 days early on this suggestion. But if you look at this based off the daily chart, you can see that from 161 down into the lows that were made at 143, that's a swing high and a swing low. And then you make a lower high and a lower low, which is the textbook definition of a bearish trend. That's where I'm thinking if you can get that fresh low that comes down into about 138, kind of right there, where it'll meet up with the 200 days simple moving average, that's a spot where we may have an opportunity to buy the weekly. So I like that within the scope of the bigger picture time frame. And then I'm working to look at Qualcomm inside of that. Now Qualcomm is interesting because if you go way back, all the way into the .com crash. If you guys were trading during that time, leave me a comment. Let me know what it was like. It was a little bit before I was focused on the markets. But if we go that far back in time, you can see where on that rush up, it pauses right at the centennial value, right? The high of that .com move was into 100. So you take decades of staying below that, and now you can see essentially where, let's just use a rectangle, if we take that area and extend it out horizontally, that's where you're trying to find some supply for this current move. So again, that's a very broad scope, but when you see that monthly squeeze, it kind of fires short, it gives you that big downdraft. You move into that area, again, of demand. May have misquoted that the first round, but you guys know what I'm looking at here. And I just think that that has bullish potential. Now, the other thing that I like adding into this, because I'm looking for the move that once it gets above 115, 120 could be a pretty direct move, and hopefully that offers us some good trades. But the other thing that I wanted to show you here was the seasonal tendency of Qualcomm. So you can do this over all kinds of scopes. And of course you can do this a little bit to curve fit, which I'm trying to not do here. But if we look at it over the course of the past 10 years, you can see that this October into November period tends to be pretty good for the stock. Look at it over the course of the last 3 years. This is even more impressive, right? So you can kind of tailor these time frames to look at the idea of what you're trying to do, or at least based off its past, is buy it right there at the beginning of November and then see if you can catch, a pretty strong directional move. So that's what I think is hidden in this chart. Obviously, it could be a little weak if the market still wants to push lower, but I want to have that on your radar as I think it will provide some good trades. So y'all have a great rest of your evening, and I hope to see you in the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.